welcome to this special episode of Eye on India. I'm Shereen Bhan. We're coming to you from the Global Entrepreneurship Summit in Hyderabad. Prime Minister Modi and the advisor to the President of the US, Ivanka Trump, here celebrating the spirit of entrepreneurship. We're proud to have with us the global CEO of EY, Mark Weinberger, on the show again. Thanks very much, Mark, for joining us, and welcome to the Global Entrepreneurship Summit. You're here with your daughter as well, I believe.
I am.
So this is really a celebration of global entrepreneurship here.
It is, Shereen. Great to see you. Great to be with you again. It's really been a terrific event. Great people here, great entrepreneurs, great big companies. And, of course, it's focused on women first, prosperity for all. So a very acute focus on women and entrepreneurship for women, and a lot of discussion around that. Ivanka's leading it. I thought the opening session was great. Had a great dinner last night celebrating the culture of India, and my daughter's having a great time.
Excellent. You know, since you talked about women, let me ask you about what EY, for instance, is doing to encourage and retain women as part of your workforce. And what's the target that you've set for yourself in terms of being able to get more women onto the workforce?
So, excellent point. And this is a social issue, of course. I want my daughter to have every opportunity my three sons have. But what we realize at EY, it's also a business issue. Diversity of thought adds to better questions, leads to better answers, to better the world works, which is our tagline. So we spend a lot of time on women, diversity, and in fact, this in 2016 was the first time in our history that the retention of women was higher than the retention of men.
Wow.
And just 15 years ago, there was a 10 percentage point difference. So the importance of flexibility, recognizing the unique position women have in the home front as well as having to work. Flexibility is a huge issue, not only from work style, but how often you work and where. And so that's a big deal for us. And attracting women is very important as well. Last year alone, nearly 30% of our new partners were women, and 35% of our new partners were from emerging markets. Another very important diversity element in the future of business.
Well, that's good to hear, Mark.
Yeah.
But let me ask you about India. And I know that you know, you've been bullish on the India story for a while now. Since we last spoke, which I think was in June in DC when the Prime Minister was visiting, you know, the GST has been rolled out. We've got the insolvency and bankruptcy ordinance now in place, so that process is moving forward. What are the thoughts on what's really changed, and what are the questions that investors are asking you now?
So, Shereen, you're right. I was bullish, and I remain bullish on the intermediate and long term for India. It is a very impressive set of reforms that the Prime Minister has been able to get through as he's gained more seats in Congress here. So when you look at the GST, when you look at the Insolvency Act, the non-performing loan provisions, yeah, there's short-term hits because these are very big initiatives that will undoubtedly cause unintended consequences. But for the long term, they are very valuable. And you see that with Moody's coming out for the first time in 14 years and increasing the ratings, with the ease of doing business moving up significantly to do 100th. Really important, I think, evidence of the importance of these reforms to the investor community.
So what's the number one question that you get asked? What are the clients asking you about investing in India, whether putting in fresh money into India or incremental investments into India?
Well, what is the trend line of the things we're talking about? So clearly there's still difficulty. There's bureaucracy. You have all the different states to deal with. You have infrastructure issues. You have internet connectivity issues in different parts of the world. So we get questions like, where are the right places to invest? What is the business climate? Is there really an openness to inviting different industries in to participate in the growth in India? And increasingly the answer to all those questions is yes. And it doesn't mean it's going to be a smooth linear line straight up, but what it does mean is that they're moving in the right direction. And so you might have to keep your money here invested for a little longer. Your return may not be immediate, but the long-term projections for India, at least for most of our clients, has been we're willing to get in there and we want to be there because the growth in the population, the digitization of India, the startup in India are all very positive.
You know, so if I were to ask you, you know, EY does this FDI survey annually. So what's looking good in terms of other emerging markets relative to India today?
Well, that's part of the benefit for India. India is rising ahead of some of the other markets as you have difficulties in South America, which is what's going on in Colombia, Venezuela, and Brazil. Actually, Russia, which is quite interesting with the oil prices coming back a little bit, even with the sanctions, is starting to grow again. So some of the really looking for investment in Russia is good. Middle East continues to be a strong investment opportunity, even with some of the disruption there, as you're seeing with Qatar and Saudi Arabia. But the emerging markets are still outperforming on a growth level the developed markets. And in fact, for EY, we continue to have our developing market growth exceed our developed market growth. India, for example, for us last year grew 19%. We have some 40,000 people here now, and by the end of our fiscal year, we're going to have another 10,000.
Wow.
So big opportunities. China, we don't want to leave out China, of course. China, after the 19th Communist Congress ended, we're now looking at what types of longer-term reforms will be put in place, provide some now visibility as to what direction they're going to go in and whether reforms will continue to happen. China remains a very big investment spot for all of our clients.
Let me talk to you about the developed markets, and let me start by asking you about the U.S. We've seen the recovery, and it looks stable at this point in time. The focus now clearly is on the tax reforms. We heard from Ivanka Trump here saying that the administration's laser-like focus was on ensuring that the tax reforms go through. What's the sense that you get in terms of what that could potentially mean in terms of fund flows?
So, Shereen, this is a big week, of course, for tax reform. It's passed the House of Representatives. It's now being considered in the United States Senate this week. And then the hope is that it'll pass there. They'll have a conference, and the president will sign it by the end of the year. The major points in the tax reform is to have a competitive system with the rest of the world, move their corporate tax rate down to 20% from the highest rate in the world at 39%. Move to a territorial system like the rest of the world has moved to, and provide some also benefits for the 95% of businesses that are not corporations but are pass-through businesses, and middle-income tax relief. So all stimulative to the economy in the U.S. And the big thing is to erode the move of what they called inversions. Many U.S. companies moving overseas to more competitive systems, or having foreign acquisitions of U.S. businesses over the last many years has been very, very high, even bigger than the inversion issue. To arrest that, where companies feel like they have to move overseas. So if this happens, and you have a territorial system, there's $3 trillion in cash that's overseas. Some of it will be brought back and invested in the lower tax rate, and expensing in the United States for capital equipment will make it more attractive to invest there. So I think we'll see increased investment in productivity equipment, higher wages, more jobs, and a net positive for the U.S. economy.
Net positive for the U.S. economy, but what about, emerging markets like India? Because of, the inversion issue that you talked about, the repatriation issue that you talked about, what could it mean in the long term as far as countries like India who are trying to attract investments from the U.S.?
Well, some of the emerging markets, including India, have done a good job of reforming their systems. In fact, many of them have lowered their corporate tax rates and moved to a better regime. I think what this will do, if the U.S. companies have more profits, they're increasingly looking to move outside the United States to the capital markets and to the consumer markets that are most attractive. So remember, 95% of the world's consumers, 80% of the GDP growth by purchasing power is outside the United States. So these U.S. businesses are going to be investing in India, in China, in ASEAN, and these fast-growing markets. It's going to happen, What the tax reform is meant to do is take away taxes and impetus to put an investment one place or another. The money is still going to go to where the markets are, where the consumers are, and where the growth is going to be.
Speaking of growth, what we're seeing happen as far as the financial markets are concerned, I mean, the rally continues without any sort of slowdown at all. The OECD has raised concerns about the fact that whether it's linked to growth or not, I mean, valuations are frothy, irrational, call it what you like. But what's your own take on what's happening as far as the financial markets are concerned?
Well, the financial markets have certainly accelerated even faster than economic growth. You got to believe that somehow there's an optimism in there. We've had a long stretch since 2008, slow but steady, of growth in the financial markets. At some point, they're going to have to correct, right? They're going to have to come back. Over time, there's never been a period that the markets don't correct. When that's going to happen, how much, we don't know. I think the positive policies that are out there across the world today are helping. The economies in Europe are much stronger than they had been in a long time. The U.S. economy, as you said, remains stable. The emerging market's doing well. The real risk, I think, Shereen, are the geopolitical issues. What may happen with North Korea, what may happen in the Middle East, what may happen in South America, what can continue to happen on governments being more and more
But isn't
nationalistic.
that being largely discounted? I mean, we've had another missile being fired by North Korea just last night. But do you think that the markets have pretty much discounted this sort of geopolitical risk at this point in time?
It seems like they have. It seems like they're not as concerned concerned about that. I think where the markets seem to be focused on is on technology disruption. To, looking at those companies that are going to weather the storm and be good through the technology disruption as opposed to geopolitical disruption. And there's you're seeing companies who are being punished if they're not being, like the consumer product companies who aren't being deemed to be disrupting themselves enough, like the Amazons and Walmart's disrupting itself with e-commerce in the United States. That's where I think you're seeing the investors really discern between companies.